Hey everyone, and welcome to the $1 million portfolio journey. It's the 29th of August 2025, and it's around 7:20 here in London, and I'm gonna do a rotation today. So basically what I'm gonna do is I'm gonna take one share out of my general investment account for Tesla and then put it into my stocks and shares ISA. So the reason for rotating this, the first reason is I don't have any extra money to invest this month so far. So basically I've stopped my investing for the moment because I'm working on another project. So basically what I do is I'm in the property sector. I rent out properties in London. I have a portfolio of properties, and what I'm trying to do is I'm trying to convert the property from being rented out to tenants, and I'm gonna go down the serviced accommodation way of doing things. So that kind of takes time, it takes money, you have to do a lot of upfront investing, but you will be able to hopefully increase your income compared to just doing it just doing the normal conventional renting out of properties in London. So that's what I'm doing at the moment. So I've paused my investment, but I'm not going to pause my rotation. So basically I'm rotating money from my general investment account into my stocks and shares ISA. So I'm doing this one share at a time. So I did it yesterday. I took out money. I sold one share in Tesla in my general investment account, and then I transferred it over to my stocks and shares ISA, and then I bought one share of Tesla through my stocks and shares ISA. So why am I doing this? Excuse me. So basically my price target for Tesla in 2030 is $3,000. So it's trading around 336. So that's potentially at 10x. If I was to leave that share in my general investment account in 10 years time, if I wanted to take some money, if I wanted to sell the position and I wanted to take some money, then I would be subjected to capital gains tax. So that is around 40% at the moment on any increase in capital value. So basically I'll take a hit. So if I can actually, before it makes a lot of profit, if I can take it from my general investment account and put it into my stocks and shares account, then I won't be subjected to any capital gains tax. Thereby I'm making more money and paying less taxes to the government. So basically it makes sense for me to move my money from my general investment account into my stocks and shares ISA account for me and my family, or my self-invested personal pension account. If it 10x's, I'll be a winner, and if I leave it in my general investment account and it 10x's, I will be a winner, but I'll have to pay the government taxation as well. So I want to minimize my taxation as much as possible. The way I see, I pay a lot of tax already. I pay higher rate income tax. In London, in the UK, we pay a lot of taxes: direct taxes, indirect taxes, VAT, value added taxes, council tax, so many taxes that we pay. I just want to try and minimize the taxation. There's nothing wrong with being taxed, don't get me wrong, but I want to try and minimize my taxation and increase the amount of money that is compounding every year. So let's quickly do this. So I'm going to go into my general investment account first of all. Okay, I'm going to go into Tesla, and then I'm going to be selling one Tesla share. Okay. All right, so I'll be getting 245.56. So I'm going to review the order. I'm going to confirm the sell. Okay, so let's have a look at the sell order. So it's an instant order sell. It's complete, £245 and 54 pence. Number of shares 1. Price per share 332.88. FX rated with 1.3555677. FX fees 96 pence. Commission is 0. So that's done. So that's gonna be in my general investment account tomorrow on Monday, and I've already taken money into my stocks and shares ISA account from yesterday's sale. So I'm going to be buying 1 share or more. So £262 and 14 cents. So that's going to buy me 1.0571 because the share value has gone down. Okay, so just sending the order through. So that's complete now. Instant order buy, order complete. £261 and 75 pence total cost. Number of shares 1.0583. Price per share 332.60. FX rate 1.344765. So there's a bit of a gap between the buy and the sell rate. FX fee is £1.02 and the commission is 0. So it's taken me a total of £2 to move the share plus the difference in FX. So probably, you know, around £3 it's cost me to do that. But I'm looking at the longer term picture. So the more money I can take into my stocks and shares ISA and my SIP, the less taxation I will pay, especially if my price target hits in 2030, which is $3,000 for Tesla, 2,800 for MSTR, and $600 for Nvidia. So again, this is a good move that I'm making just to, you know, avoid and minimize taxation. So that's done. So as soon as my project is finished, I'm projecting it's going to take about 2 weeks to complete this project, where I'm where the tenants are leaving one of my properties. I'm gonna do it up and then I'm gonna put it on a serviced accommodation website to try and get bookings online at a higher rate. So that's the plan. Hopefully when I do get more bookings, I'll be able to make more money, and then I'll be able to put more money towards my SIP and ISA. But in the meantime, I'm just going to be rotating my money from my general investment account into my stocks and shares ISA account, and I'm going to be filling up my ISA as much as possible, and then, you know, I'm going to stop once I'm in a position to, you know, invest more money into my account. So that's that done. But let's have a look at the portfolio to see how things are going. So my general investment account is valued around just over 47, my stocks and shares ISA just over 30, and my SIP above 50. So the market is falling at the moment, so it's a good time to buy or to rotate in a more tax efficient position. So, you know, that's what I'm doing at the moment. It's taking a dip, so people are going to start buying the dip. So that's that. Let's have a look at how the companies are doing. So Tesla is trading around 332.58. It's down around 4% today, so people will be buying the dip. So that's fine. Let's have a look at MSTR. MSTR is kind of on parity with Tesla. It's trading around 334.94. 1 day movement is down around 1%, and Nvidia is taking a breather and it's down about 4%. So again, you know, the markets are dipping. It's a good opportunity to do something, which I've done. Unfortunately, I wasn't able to buy anything, which is a disappointment, but I'm rotating. I'm trying to make the portfolio as efficient as possible. So that's that. So for anyone who's new to my channel, I just wanted to say welcome and thank you for watching my videos. It's really an honor. And also I just wanted to say the purpose of this portfolio is to reach $1 million as soon as possible. I'm about, you know, I've just got under 200k in our brokerage account at the moment, and I'm about 5.1x away from $1 million. So that's the first goal. I want to get to $1 million, and then after that I'm hoping to get to 1 million by 2027, 2028. And then 5 years after that, I'd like to get to 10 million. And then another 5 years after that, I'd like to get to 100 million. So that's the target. And what I'm going to be doing is I'm going to be purchasing Tesla, Strategy, and Nvidia. These may not be the companies that I purchase all the time, but at the moment what I'm seeing is robotics, autonomy. These things are going to play a big part in the future, which is why I'm betting big on Tesla. AI is going to be a big part of the future, which is why I'm investing in Nvidia and Strategy. The reason I'm buying Strategy is because they have a very, very large Bitcoin holding, and I cannot hold Bitcoin direct in my SIP or my ISA, so it just makes sense to buy it Strategy through my ISA or my SIP because it is a treasury company for Bitcoin. So those are the reasons I'm buying it, and hopefully in another 5 years or so it should 10x, and I'm hoping to hit that million by 2027, 2028. So that's the plan. So I have 4 very simple rules when it comes to investing. The first rule is I'm a long-term investor, so anything that I buy now, I'm not going to sell it for the next 5 years, and I'm going to try and keep it for at least 10 years. And if I do sell something, the only reason I'm going to be doing it is to get into a more tax efficient position, or to rotate from a company that is overvalued to a company that is undervalued. So for example, if Strategy was to, like, in a matter of weeks go to 1,000 or 1,500, I know it's like kind of overran and it will mean revert. So what I could do is take a bit of money off of MicroStrategy and then put it into Tesla, which is down, like, let's say 20-30%. So that's what I mean by rotating, because all these companies are going to go up and it's just a matter of time, and the best way to accumulate more shares is to rotate between companies and try and find that arbitrage. So if MicroStrategy runs too high and is overbought and Tesla is oversold, it just makes sense to, like, take some profits from Strategy and then put it into Tesla. I won't sell my entire position, it's going to be a little bit, but that little bit will make a big difference. So that's rule number 1. Rule number 2 is I'm a very aggressive investor, so I try to do something every day, whether it's rotating into a more tax efficient position, investing every day. Like, the market is open, I try to invest £250 every day. My aspiration is to get to £1,000 a day, which is why I'm trying to, like, upgrade my properties, take it to a serviced accommodation model, trying to, like, secure more properties. The purpose is to increase my income. Once I increase my income, what I do is I keep 40% set aside for taxation, keep some for household expenses, and then the remaining I invest into an ISA or a SIP for myself and my family. So that's basically what I'm doing. So that's rule number 2. Rule number 3 is I invest in very volatile companies like Tesla, Strategy, and Nvidia. So these are the companies of the future, but it's not going to be an easy ride. It's going to be a very, very bumpy ride. These companies can go down by 20%, or they can 2x in a matter of months. That's how volatile it is. So you have to be prepared with the volatility, and just not screw up, not be afraid, not, like, just sell your position when the shit hits the fan. So things like that, you have to be able to hold the company, especially during the down period. So that's rule number 3, highly volatile investing. And then rule number 4 is to be as tax efficient as possible. So I always try to max out my ISA, try to max out my SIP, and I'm always, like, trying to get my positions more and more tax efficient. So when I do crystallize these benefits, when I do decide to sell, I'm gonna minimize my taxation, because I feel I paid more than my fair share of taxes. So yeah, so that's how things are. Another thing I wanted to is, you know, if you're gonna invest your money, there's no problems, there's no like issues if you want to invest it like, you know, once a month, £100 a month, and you want to invest in index funds. That's fine. If you want to do it, if you want to do the slow way, that's absolutely fine. But the way I'm doing it is I'm trying to get to that million as soon as possible. So once I hit the million, I've got another goal of hitting 10 million. So it's fine, whatever suits you. But I think the most important thing that you need to do is you need to start investing, because if you think about it, you've got to contend with inflation, you got to contend with taxation. I live in London, I know how high inflation is. You know, whatever I spend this year, I know just to do the same amount for next year, I'll probably have to spend 20% more. So whoever said, you know, CPI is at 2.5% or 4% or whatever, it's not realistic. It's much more than that. I think, you know, it's around 15-20%, especially in London where everything is priced higher. So, you know, you just have to try and increase your income. And you know what I try to do is I always look for investment opportunities where I can 10x my money in 5 years or less. Otherwise you're not really, you know, your money is not really growing, especially when you take into account inflation, debasement, money printing, taxation, cost of living. There's so many things that you have to contend with before you can make a profit. So that's why you have to find these highly volatile, high growth companies to try and achieve a compound annual growth rate of 30% or more, just to mitigate the effects of inflation, mitigate the effects of taxation, and then hopefully watch it grow. So if I can achieve a 30% plus compound annual growth rate, then the compounding effect eventually should be greater than what I'm paying in taxation and in inflation, especially if I can put it into a tax efficient vehicle like an ISA or a SIP. So that's the plan. That's what I'm doing at the moment. I'm a long way away from hitting a million, but I'm going in the right direction. I'm hoping to hit it between 2027 and 2028. So join me on my journey, subscribe to my channel, you know, leave a comment below, like the content if you find it entertaining. If you dislike it, leave a dislike, but do something. And you know, hopefully these videos are inspiring. They will inspire you to invest, especially if you're living in London where the cost of living is so high. You want to try and get ahead, and this is one way that you can get ahead, by investing in high risk, high return companies. So that's it for today. I'll bring you another update on Monday where I will be rotating another £250 or hopefully be investing another £250. So that's it for today. Have a great day, have a great weekend, and I will bring you another video on Monday. Take care. Bye.